Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I interview founders, entrepreneurs, executives, thought leaders, artists, you name it, across the world of crypto and blockchain. And today, coming to me from the other side of the world, from Singapore, is the Chief Operating Officer of Bitget Wallet. His name is Alvin Khan. Alvin, welcome to the show.
Hey everyone, thanks for inviting. Great to be here.
Thank you for joining me. So let's kick things off, and I'll ask you the first question. That's my standard question. Is what is your background, and is it a logical background for what you're doing now?
Great question. Wow, I don't even know if it's logical. It's been a long time and many intertwines there. I started off my career in the government sector. I was in the Singapore Tourism Board trying to get events and business tourists into Singapore. Did that for a couple of years, and then somehow stumbled into tech. So I was at LinkedIn for 9 years, pretty long. So I did a couple of roles there in sales, and I did a pivot of my career into data analytics. So there was kind of a sweet spot back then when data analytics was becoming the hot topic. And I joined LinkedIn back in 2012. So that was a time when not too many people knew about it. So after 9 years, I was kind of looking for something more exciting, something that's on the emerging front. The reason why I joined Web3 was very much because it reminded me of why I joined LinkedIn in the first place, right? It's kind of like a hidden gem, something that's, a movement was underway, but many people didn't know about it yet. And that was a time when I really paid notice around 2019, 2020 to crypto. And then I joined Binance back then, first through data analytics, and then was in charge of the ecosystem development at BNB Chain. So ever since then, I've been doing a range of like BD and growth roles, first at BNB Chain, after that at L1 called Say, and now at Bitget Wallet. Tell me if that's logical.
Oh, it's a lot more logical than you think. So, that sounds good. So Bitget Wallet, right? There are a lot of
Yes.
wallets in the world, right? So I want to find out what you're all about and what differentiates your wallet from other wallet providers.
Sure. So Bitget Wallet, in essence, is a self-custodial wallet, right? If you're used to MetaMask and the rest, it's the same kind of wallet, but with a lot more functions. I'll go into it later. We have 20 million users globally, and where we really differentiate from the rest is in the comprehensiveness of what you can do, right? If you look at, say, MetaMask, Trust Wallet, I mean, there are many other wallets out there, but essentially, you can do things like simple swaps. You can probably connect to some of the EVMs. But if you're looking to access the newer opportunities, right, and there's so many opportunities in Web3 that's emerging, this is where we really shine. We are probably one of the very, very few wallets where you're able to swap across Ethereum, Solana, Bitcoin, non-EVMs and so on. And you're trying to get, I think most users are used to having like, all right, I have MetaMask for this. I have maybe, I don't know, OKX wallet for that and so on. I Phantom for Solana. And we actually realized after getting feedback from users that they want one place to access all these kind of opportunities. So today, if you're looking at, say, whether it's Politify coins, whether you're looking at coins that just emerged in the last few hours, we're usually one of the first few wallets where you can just swap very, very easily within our in-app swap. That's just one of the ways we look at it. The reason why we can help users to access all these newer opportunities is really because of the DNA of the team itself. So a lot of us are very much degens in this space. If you look at the innovation, we were established since 6 years ago. We were the first wallet to have, something as simple as candlestick charts in the wallet itself when you're looking at coins, right? Today, I think on most wallets, you still don't get that. And these charts allow you to decide like when to buy in, for example. We are the only wallet right now with smart money. So if you're looking at a token, we can tell you, what the whales and the sharks are actually buying, what are they buying, how many of them are buying and how many of them are selling and so on. We have features like instant gas, right? If you have, Ethereum on Ethereum chain, but you're trying to buy something on Base or Polygon, but you don't have gas fees there, we allow you to actually just do a simple cross-chain swap without needing gas fees on the other chain. So a lot of this happened because we are very much degens ourselves. We're always pursuing these new opportunities, right? And we get this feedback from users a lot. So today, I'm pretty confident to say that, Bitget Wallet is the best wallet for trading as well as earning tokens, especially for new emerging areas that you're interested in.
So you're telling me you could swap from Ethereum to Solana to some kind of meme coin without paying any gas fees?
Well, you have to pay gas fees, but you don't need the gas fees from the new chain, right? For example, for Polygon, you just need Ethereum and Ethereum, right? And you say you want to buy this token on Polygon, that's fine. You don't need to have Matic on Polygon. We do this for a few chains, not all the chains, right? But we slowly expand. And that's just one simple feature of how we make it easier for users to trade.
Sounds good.
It is.
Yeah, it does. Wow. Okay. So, I have a lot of questions. You could pick any random coin. I can pick any random coin and tell you, and you could tell me if it's bots or if it's real people.
If it's what?
Bots or if it's real people.
You mean the token itself? So we have token screening, right? And I'm sure we'll talk about security later. What we've done is we've integrated vendors like service providers like Go Plus and so on, and they screen all these tokens and so-called phishing sites as well. And we actually integrate that within our wallet. So today, if you're selecting a token in our swap, right? And we show what kind of risk and how many risk factors there are with each coin, right? You can see that before you decide to buy. Same thing with dApps as well. So through our phishing site screeners, we make sure that we are only integrating wallets in our dApp connection section that are safe, right? So again, these are very small things, but they matter a lot because like I myself, many years ago was also kind of scammed, small amount, but on, some kind of token. In the past, you wouldn't know, right, whether it's a honeypot or whatsoever. You need to really dive deep into it. And what we're trying to do is, look, there's going to be more and more new users coming to Web3, right? And they're not familiar with what's a honeypot, for example. We got to make it really, really simple and just, surface that alert wherever they're buying. And a lot of times that's in the wallet itself.
I got to ask for my new listeners, because I do have new listeners all the time. What's a honeypot?
So essentially you get all kinds of scams. So for example, this one is really where you can buy in, but the contract doesn't allow you to sell, right? And there's a lot more risk factors. I recall Go Plus probably has like 60 to 100 screen factors that they look at. Probably there's more that has come up since.
Yeah, I've gotten scammed too. So let's talk about security. Certic released their 2023 Web3 industry security report. I'll get the numbers here. It identified 751 securities incidents resulting in $1.84 billion in losses. And this was actually an improvement from 2022. How can we reduce this number? It's even further in 2024, and I mean that's a massive number, 1.4 billion. So, how can we bring that down, and what's improved?
Okay. I would say, well, the reports and the numbers are correct, but there's also a context there. So I'll say it's true and false in a way. It's true that there's greater security awareness right now. We talked about, honeypots and risk factors just now. And I still recall that there was this project called, I think it was Squid Game. And if you recall the Netflix show, right, it became really, really popular. And because of that, people started buying into this Squid Game token. And itself, the token doesn't allow you to sell it. By the time, this kind of scams were still quite new, right? But today, all the audits and all the token screenings would already have such screening factors in their mechanisms. So because of that continued improvement, a lot of these previous scams are already included in assessments today, right? So you get less chances of being scammed that way. Audits are becoming more comprehensive. There's also more audit providers. During the bull market last year, last year, I recall it could take as long as 3 months, 4 months, like the audit providers were all backed up, right? There was so much backlog for them to clear, but today is a lot better because there's a lot more security providers out there. And also like the breadth of it, we mentioned about token screening, there's phishing site screening as well. And there is also, companies like, I think there's one called Doppel, for example. And what they do is they look into if you subscribe to the service, they look into all your Discord channels, they screen through all Twitter, and they try to understand and try to screen for fake sites, right? Or fake accounts they're trying to be you, right? So there's a lot more broadened services out there that is trying to prevent all these things from happening. And I think that is why it's leading to a decline, or it led to a decline last year. But the flip side is that last year may have been an improvement because last year was a bear market, right? If you compare to the year before. So less activity, less liquidity, obviously there's going to be less scams and less scammed amounts. This year, however, has been a bull market, right, since last year, November. So I'll be interested to see if that number really continued to drop. Hopefully it did, but with the amounts coming up, I'm sure there's a lot of scammers out there. It's not uncommon to see like projects talking about like airdrop farmings, and they have to put like a last tweet to say this is the last tweet. You didn't have to do this a few years ago, but today, if you don't do that, all the scammers are going to follow up with the next tweet, kind of scamming people. And many people have fallen, trick to this as well. So I think the projects themselves, the users, we all need to play a part in preventing these scams.
It was a bull market. I mean, it might still be a bull market, but the prices in the past few weeks haven't shown a bull market. Like everything's been.
The last few days has been terrible. Yeah.
Is that just a summer thing leading up to 6 months after the Bitcoin halving? And well, so you should expect everything to come back in October? I'm thinking that.
I hope so. I mean, I think I saw a tweet by one influencer who analyzed the last two cycles. I think he mentioned that the peak of the alt cycle came, I think, 546 days after the Bitcoin halving. So if he's right, there's still some legs to go to October next year. But look, it's going to be volatile. If you ask me, is the bull cycle over? I don't think so. That's my personal opinion, right? And I think there are many legs to a bull cycle, right? There was another good analyst, Dovi1 on Twitter, and she mentioned that there are three legs to a bull cycle. And this could be the second or third, but it's going to come up again.
Okay, so we're still in a bull cycle. Scammers are still out there, and you have created a very robust security agenda, right? In addition to the phishing tracker and the token tracker, what features have you implemented that will help improve the overall risk tolerance?
Yeah, I would say the token screening, phishing site screening, they do help prevent a huge number of scams. There is also, I think, one part that we don't talk enough about with regards to security, and that's making the UI simple and easy. And what do I mean by that? So, Trust Wallet started out as a mobile app, right? And for a very long time, they only stuck to a mobile app and not a Chrome extension, although they recently did it. And one of the reasons why they were so insistent on it was because of security. Just using your phone instead of your browser extension, to me, has a lot more natural protection. And that is also why we put a lot of emphasis and technical engineering resources into making sure that you can swap, you can do anything that you want on the mobile app. And this cannot be said the same for most projects or even wallets on Web3, right? I think ask most Web3 people and they'll say, yeah, I still use a desktop because the experience is so much better than on the mobile. But the reason why mobile is more secure is because every transaction that you do, you need to have a Face ID, right? And the Face ID is a much better way than kind of signing transactions or just keying a password on your Chrome extension. So enabling all these features to be easily used, right, on mobile, to me, is a huge, huge security advantage. The other one is also making sure that there's a great aggregator. What do I mean by that? So today on our swap itself, right, if you go to the wallet, go to the swap section, you can do cross-chain swaps across 30 over chains. And when you swap, you get options from 100 over aggregators and DEXs that we aggregate. So for example, you want to swap a token, right? All right, we'll check. Is this Uniswap? We connect to Uniswap, we connect to 1inch, we connect to 0x, we connect to all these aggregators to make sure that you're getting the best fees, the best rates. And why that matters is it's better than the user going to kind of authorize and sign into different DEXs, right? Say you sign to 10 different DEXs to swap 10 different tokens or to check the quotes. And then you're exposing yourself to 10 times the kind of risk, right? Especially for newer tokens where you may have to go to smaller DEXs that you're not familiar with. But on an aggregator, what you're doing is you're just signing into your wallet and you're able to access these tokens in the same safe, familiar environment rather than going to a new site and signing, the different contracts. So that's why I say having these features and comprehensive features within the wallet is already a great way to protect the user. And that's why we're so focused on that.
You know, you're talking about DEX aggregators, and I can think about like I don't have this on Telegram anymore, but I had it where like I could see like all the new meme coins, like the thousands of them that created every single day, show up on an aggregator. You know, when you're looking at it, the numbers look like, oh, you make 10 billion%. You know, that kind of looks kind of good, you know, from a number perspective, but like there's risk there, you know, and what should people be worried of? And you know, when I see that, if they maybe they could think they could make 10 billion%.
Yeah. So it is risky, and there are two things here, right? So one is from a service provider perspective, right? From wallet or DEX. Do you try to play government and say that you should buy this and you shouldn't buy this? And to what extent, right? And our take is we believe in Web3 and decentralization. We believe in giving control back to people. And so the how you actually show the risk is important. And that's what we are focused on as well. So we have all these APIs bringing in like token screening factors and so on. But being able to demonstrate that and show that very, very clearly to the user, all right, you're free to do what you want to do, but we got to alert you to these risks. So that's one part, right? How do we balance that? The second one is then, like you mentioned, can you really earn, 100x, 1000x from it? Look, it's possible, but there's also a lot of risk. Like I mentioned, it could be a honeypot. It could be that there is, tax reflections. For example, when you sell, some of the coins have like a 10% tax. And that itself, some people argue is a design of the token. Some people argue that it's a scam. I think people who earn money say it's a design. People who lose money say that it's a scam. So it depends. I think just making sure that we're able to show the different types of risk and exactly what it is to the users, that's important. And ultimately, a lot of people also kind of like dump in huge amounts into small liquidity pools. That's also a risk, right? And sometimes that sort of risk, the token creator didn't mean for it, but then users who are not used to it, right? You don't know, because many of us are familiar with, right? All right, I'll go to NASDAQ, I'll buy some stocks, and it's always in the market price. But in tokens, the liquidity pool could be small enough, right, for your slippage to be super high. And that's something people need to understand as well.
I'm trying to think back to successful things where they were created by the creator, right? And where somebody just put like 10 grand in the liquidity pool and it took off. You know, I think I saw that on Pork and Pepe, right? But not everything's going to be that successful, right? Actually, much more failures, right? So,
Yes.
what risk measures do you have in place where you have people just creating stuff not validated, not audited, maybe like one of those two, or maybe like a slurf where the code is just wrong, to safeguard people from losing all their money?
Yeah. So it would show, right, in the token screening. And so on our part, we make sure that we're working with the right service providers. We're always questioning, like, do you have the latest tokens? How frequently do you screen these tokens? How wide a coverage do you have? And one thing, providers need to do better is to support newer non-EVM chains. A lot of these providers say, all right, we screen 100 over chains. And then when you ask, it's all EVM chains, right? Many of them don't support Solana. Many of them may not support, I don't know, Con is coming up, right? And that's non-EVM as well. Aptos, Sui on Move. So I think we have to continually find service providers that provide screening for these different blockchains, make sure the coverage is wide enough. And then on our side in the wallet, whenever you're buying, we would actually show. So we even go down to showing, all right, there's 2 audit risks. There is 3 specific risks with this token, right? And you can click in to see exactly what kind of risk. So it's important for us, again, to make sure that the user has the right information before deciding what they want to do with it.
So what you're saying is there's a lot more room for infrastructure builders to enter the space of the non-EVM chains and improve.
Yes, I think so. Everyone is saying the same thing, right? From an infra provider, yeah, we can expand all these EVM chains. But then, for example, if you expand your service to Solana, it's not as easy as, all right, let me just research on it. You need to hire a Rust developer, right? So you need to start thinking about headcounts and expanding your team. It's a totally different ballgame for them.
Got it. So I see potential and I see opportunity. Um,
Yes.
so I want to talk about you mentioned the wallet, and you mentioned the Trust Wallet before, and you mentioned different types of technology, but keyless technology. Because we're all told not your keys, not your crypto, but keyless technology is now becoming a thing. So why is that the future of wallets?
Yep. Um, I think two reasons. There are many reasons, but two big ones. One is it's just easier. We're so used in Web2, right? All right, sign in with Gmail, sign in with your Facebook account, Instagram account, and so on. And then when I first came to Web3, for the life of me, I couldn't understand like why do I have to remember these 12 words? And all right, you jot it down, and where are you gonna keep it, right? If you keep it all in one place, it's not as safe, right? And then you split it into three, and you kind of forgot where you put, some of the words. So it's very, very cumbersome, to be honest, when people have to physically kind of store these places. I know of many people who just kind of type out the 12 keywords and save it in their notes in their MacBook and so on, and it's not always safe, right? But it happens. So I think it's just easier for users to onboard, right? Create a wallet and start going. When you have a keyless wallet, it's so much easier. And there are also kind of things in between. For example, today, when you sign up for a non-keyless wallet, I think you can opt to kind of back up your keys later, so you can kind of start doing some stuff. That's great. But I think keyless is kind of a very big part of our future here. So easy onboarding is one. The other one is just, like I mentioned, it's just more secure, a more secure way to store your keys, right? Especially if you're someone who tend to forget where you put your keys. And most of the cases, right, where this kind of assets are lost is because the keys were leaked, right? We've seen it so many times. And the funny thing is, it's not just individuals, right? We hear of this on projects. When I was BNB chain, I saw quite a few projects there, right? No for the BNB chain, but the projects themselves. And many of these projects are very, very seasoned developers and Web3 people, right? These are developers who have gone through like multiple cycles. They've made several projects. They're very experienced in Web3, and yet they still lose their private key and get hacked. So if very experienced people, that happens to them, then it will happen to individuals, right? For sure, in some kind of probability. So I think again, having an MPC wallet kind of reduces that threshold.
Got it. So you mentioned BNB, and I want to get into that a little bit later after this question.
Mm-hmm. Sure.
But if we put all these guys together, in FTX, some people who went to jail, some people who should be going to jail. I won't name names. And not CZ. I'm not talking about CZ. There was we had a pre FTX world that where everybody was putting money in CFI. You know,
Mm-hmm.
and we learned a lot of lessons, right? Since then, with those lessons that learned today, what would have been addressed in that CFI boom, and then what difficulties are we still presented with now that we have to deal with?
Yeah. I've always felt that CFI is important, but CFI is important as a gateway into Web3. It's always been about the decentralized world, right? It started with Bitcoin on blockchain, with Ethereum, but CFI made it easier for people to kind of onboard, on ramp, and so on. But the ultimate game was always towards the DeFi world. Um, and I think what it reminded, and why, I think there's an important question of why decentralized is the future, right? It's because there is this movement underway where people don't trust centralized entities, or they feel that there's a way for communities or stuff to be organized in a more decentralized manner. Um, and so I do think with FTX, that kind of scandal, it serves as a reminder that, hey, the end goal is to go decentralized, right? And so we see wallets, we see, DEXs becoming way more popular, and trading volumes as a proportion to CFI volumes have been going up, right? Ever since then. So you can say it's a distrust of CFI, but to me, it was just a natural evolution and just a reminder that, hey, let's go towards more DEXs and more, Web3 self-custodial wallets in the future. I think it has changed the game for CFI as well. they feel that they need to work harder to earn the trust, right? After that. And what it means is, for example, proof of assets, right, is become a thing now, right? Every major CeFi has, this ledger or somewhere that shows, all right, I have all these assets on chain to prove that I have all these reserves. So proof of reserves is a big thing now. I think security measures have also come up. I think recently, whether it's OKX or a few others, I think we're starting to see, some of these, I would say like security lapses and measures going up and down. So we're going to see CeFi having to become more responsible and kind of, how would I put it? They feel they have to work harder, I think, to earn the trust in a very short way of putting it.
Work harder to regain trust. I think now we're going to talk about BNB or or Binance. Um, you know, what does Binance and what does BNB chain need to do to regain trust? In this environment, since everything's gone down the way it has.
In a way, I feel that there is the non-crypto crowd and the crypto crowd, right? And the non-crypto crowd has probably always seen Binance in a more negative light, because of, the way, Western media always writes about Binance and so on. To me, honestly, like I feel that Binance has changed a lot over the years. Personally been in meetings with CZ as well. He works pretty hard. And I don't know what happened in the past, but I do think the non-Web3 world will probably always see Binance in a more negative light. But the Web3 folks, right? If you look at, say, how many people are holding BNB right now, if you look at, how many people are buying into tokens that are launched on BNB chain or Binance, I'm not sure if it's changed that much. Yeah, some people probably lost the trust, but again, a lot of people are here for profits, and they feel that, Binance still has a lot to offer right now.
I agree with you. And one of the things that used to happen was these thing called scam wicks.
What's
They
that?
don't they don't happen anymore. Like scam wicks are like where a price of a token just flashed,
Yes.
goes to zero, and then back
Yep.
up or whatever. I don't see that anymore.
Well, yeah, I don't know. Many of them are probably not reported as well. But yeah, I do remember there were one or two. I think one happened for Bitcoin as well.
Yeah. So I think the trust is improving actually.
Hope
You
so.
know. Yeah. So I want to thank you very much for speaking with me today, taking the time out of your schedule, and I enjoyed speaking with you. And um, I have one last question, and that's how can people find out more information about you, about Bitget? How can they get a Bitget wallet, and what can they look forward to doing once they get their Bitget wallet? What are your thoughts?
Yeah. Well, the best way to learn about Bitget Wallet or Web3 easily is just to download, go to your App Store, Android Store, and just search for Bitget Wallet. I promise you that, it'll be the best mobile Web3 wallet experience that you have. And what you can do with it. So we want to be the best wallet for token trading as well as earning. So I'll just touch a bit on both. Now, in terms of earning, Bitget Wallet today, we do about 3 to 4 campaigns every single week. And for each week, we probably give out over $100,000 USD worth of reward tokens. So that itself means that there's a lot of opportunities for users who are coming in just to earn tokens by simply doing 5-minute tasks and so on. And all these can be done easily within the wallet app itself. I don't think any other wallet actually comes close in terms of the number of campaigns and the amount of rewards that they can win. So try it out, right? And the second one is just trading of tokens. Again, across Bitcoin, Solana, EVMs, Aptos, Sui. I think this is the wallet where you'll probably get the most opportunities of accessing these new tokens and new chains. So try it out. Yeah.
I'm going to try it out. Um,
Thank you.
yeah, thank you very much for your time today.
Same here.